Good morning. My name is Gianluca Santi and I'm the General Manager of the Business Development and Corporate Communication at Unipol Group. I'm going to take you through our preliminary annual results released today. The overall performance of which I'm reporting now represents a period of solid progress in line with our 2019-2021 strategic plan that we have outlined in May last year. I think it's fair to say we have taken a further step towards producing high-quality returns for our shareholders on a sustainable basis. Some key messages to define the Group 2019 results in a snapshot. Profits are growing. Normalized consolidated result went up by 19.5% at Unipol level and by 3.2% at UnipolSai. Dividend proposal provides for an increase of our shareholders' remuneration compared to last year. 28 cents is the dividend per share for Unipol, meaning plus 56% year-on-year, and 60 cents for UnipolSai, plus 10%. Non-motor collection remains very strong, especially the health sector, which registered a double-digit growth, plus 11.2%. Solvency ratios improved significantly. Unipol plus 18 percentage points and UnipolSai plus 48 percentage points. Overall, despite the challenging environment, we can confirm the targets set out in the group strategic plan. Let us go deeper into consolidated results. First, we present results as normalized, that is the net of the two non-recurring items. At Unipol level, the first item is the positive impact of the consolidation of BPER, already booked at 9 months. The second item is the cost of Solidarity Fund, accounted for in the second half and originally disclosed in our strategic plan, which affects UnipolSai accounts as well. Unipol pre-tax normalized result showed a good increase, going from 860 million euros at full year 18 to 962 million euros at full year 19, especially thanks to the good result in long life and holding other business, which more than offset the decrease recorded by life sector. The net consolidated normalized result was 732 million, almost 20% higher than last year. This figure for UnipolSai was 721 million, with an increase of 3.2% compared to the same period last year. Analyzing the reported results, which include the extraordinary effects, Unipol actual consolidated net result at full year 2019 was 1,087 million. The first consolidation of BPER, 421 million, and the negative one-off item of the Solidarity Fund, 66 million, affected this result. The full year 18 actual consolidated net result, 628 million, was impacted by the gain on the sale of Popolare Vita for 309 million, by Unipol Banca write-down for 338 million, and other minor effects. As regards UnipolSai, the actual consolidated net result was 655 million, affected only by the Solidarity Fund charges of 66 million. While 2018 actual net result of 948 million was positively impacted by the gain on Popolare Vita, by Unipol Banca write-down, and other minor effects related to the changes in the basis of consolidation. Total non-life premiums increased by 2.7% to 8.2 billion. Motor premiums flattened out, while non-motor continued to show a remarkable growth by 5.8% year-on-year. Looking at the premiums breakdown by ecosystem, mobility recorded a 0.18% increase, property 3.8% growth, and welfare a notable plus 7%, which include the brilliant performance of health business plus 11.2%. In contra, our bank insurance agreement with UniCredit, focusing on health, closed a very good year with an overall increase of 35.8%. No significant changes have been recorded in the distribution channels, with agents maintaining their leadership and collecting more than 80% of the total income. The combined ratio after reinsurance stood at 94.2%, including 4.1 percentage points impact from atmospheric events, in particular hailstorm that occurred at the end of June. Loss ratio improved from 66.8% to 66.3%, while expense ratio increased from 27.4% to 27.9%. Combined ratio from direct business stood at 93.7%, with 6 percentage points effect from atmospheric events. It's worth noting that the role of reinsurance offset a considerable part of the impact of the weather events. In motor business, the portfolio grew by 0.3%, despite the year-on-year declining trend in average premium. The number of claims reported and the frequency showed a good persistent performance. It's worth to mention that the incidence of bodily injuries is persistently decreasing, recording a minus 0.6 percentage points versus last year, and that savings on settled claims reached an impressive 47.5% in motor TPL and 66.5% in general TPL. In life, total premiums increased by 36% to 5.8 billion. UnipolSai and Arcavita continue to grow at a strong pace, 30% and 56% respectively year-on-year. Traditional products represent the majority of the portfolio, along with pension funds that perform very well. Life yields keep on performing strongly. The gap between average and minimum guaranteed yields proves to be wide and solid at 219 basis points. The composition of guaranteed yield across the backbook is constantly improving, given that the majority of the new products are sold with a 0% minimum guaranteed yield. Total investments are 58 billion at market value. In terms of asset allocation, bonds represent 86% of the portfolio, with Italian govies weighing 50% on total investments. Financial yields remain strong, with an overall running yield of 3.3%. The duration of the assets is 3.7 years in non-life and 7.4 years in life, with a low mismatch. The total value of the real estate portfolio is 4 billion, of which 53% allocated to non-life sector, 37% to real estate, and the rest between life and other sectors. Sales for 127 million were recorded in 2019, and the net write-downs value amounted to 29 million. As for the NPE business, I remind you that figures shown here include the portfolio of 1.2 billion acquired from BPER at the end of July last year. UnipolRec total portfolio at the end of 2019 amounted to 3.5 billion. Net loans were 516 million with 85% coverage. During the year, gross loans were reduced by 366 million, with collections for 110 million and a recovery rate of 30%. The company recorded a good profitability trend with a net result of 12 million in the period. We will propose an increasing amount of dividends, 28 cents for Unipol, plus 56% compared to 2018, and 16 cents for UnipolSai, plus 10% compared to 2018. These figures are consistent with the targets set out in our strategic plan. In terms of solvency, the ratios at both Unipol and UnipolSai remain solid, despite the fact that they factor in the total dividends that the companies will distribute. The ratio for Unipol, using the partial internal model, was 181%, plus 18 percentage points over 2018. UnipolSai consolidated ratio on an economic capital basis was 250%, plus 48 percentage points. The ratio for UnipolSai solo, using the partial internal model, was 281%. Looking at Solvency II components, Unipol own funds amounted to 7.8 billion, while the solvency capital requirements were 4.3 billion. UnipolSai consolidated own funds were 8.4 billion, compared with the solvency capital requirements of 3.4 billion. 2019 was the first year of the Unipol Group strategic plan. We sum up here the main actions we have promoted to develop its strategic guidelines. Actions range from technical expertise, including pricing and claims management, to commercial effectiveness, from innovative insurance models, including long-term rental, car server, in mobility, and the launch of the new initiatives in healthcare sector, to remarkable investments in people and technology. On top of that, the ESG-oriented approach that is transversal to all corporate strategic decisions. A quick comment on the level of financial targets achievement. Profits and dividends are right on track with the forecast set out in the strategic plan. Solvency ratios at both Unipol and UnipolSai are solid and above the comfort range identified in the plan. Coming to conclusion, the 2019 results confirm the solidity and profitability of the group and are aligned with our strategic plan. That brings me to the end of my presentation. Thank you for listening. Let me remind you that our Group CEO and General Manager will be pleased to take any questions from financial analysts and institutional investors during the conference call scheduled today at noon CET.